Hello, everybody. I'm Ben Rains, a stock strategist at Zacks. Today, we're exploring one of the biggest megatrends on Wall Street, the AI driven energy boom. We're diving into the soaring energy demand and then digging into the industries, stocks, and ETFs that investors should consider buying. Wall Street's already cashing in on the growing relationship between AI and skyrocketing energy and electricity demand. The big money is jumping into best in class stocks and upstarts across nuclear energy, natural gas, solar, battery storage, grid tech, and beyond. Now let's see how investors can capitalize on this once in a lifetime supercycle known as the AI energy trade. The US is just starting an energy revolution that will span decades and cost tens of trillions of dollars. This backdrop paves the way for investors to cash in on the companies that will power the AI economy. AI grabbed a bulk of the headlines over the past few years, yet Wall Street knows we won't reach the abundant AI driven future that investors are betting on without massive energy growth. AI marks a paradigm shift for energy demand. Generative AI, like ChatGPT, use 10 times the energy of an average Google search, with large data centers consuming as much electricity as a mid-sized city. AI growth and other factors are set to boost electricity demand 25% by 2030 and 75% or more by 2050. This will be no easy task. In fact, the size, scope, and timeline of the AI-driven energy boom are why investors should be so bullish. Plus, big tech, big government, and Wall Street are taking all of the above approach to the AI energy age, providing huge runway across nuclear energy, natural gas, solar, battery storage, grid infrastructure, and beyond. Reliable, affordable energy is the foundation of innovative growth economies. Yet US electricity demand remained roughly flat at around 4,200 terawatt hours between 2010 and 2023. It remained nearly flat despite huge GDP growth and a massive bull run. Energy efficiency improvements and broader economic shifts allowed that to happen. The tech sector now requires more energy than ever because of AI, and the US is also attempting to reshore critical areas of the economy, such as chip manufacturing. Electricity demand, as I mentioned, is projected to grow 25% by 2030 and 75% by 2050, with some estimates calling for 100% growth over the next 25 years. I want to linger on these charts for a bit since it helps make the bull case for the AI energy trade. Across the country, 19 of 13 power markets are reaching critical tightness levels, with 12 of 13 projected to hit critical levels by 2030. Soaring electricity demand and skyrocketing prices are now all over the front pages of the Wall Street Journal. A headline from mid-January reads, America's biggest power grid operator has an AI problem, too many data centers. This is why investors should be bullish about the AI energy trade. Simply put, the US is the richest and most dynamic economy in the world, and it will unleash an energy boom to win the AI arms race and continue dominating the global economy. Big tech, big government, and Wall Street are all in on spurring rapid energy growth because they must. Amazon, Microsoft, Alphabet, and Meta are pouring billions into AI data centers. These AI hyperscalers spent roughly $400 billion on capex in 2025, with total capex up over 300% against 2018 levels. And this spending is not stopping. AI capex is projected to hit around $530 billion in 2026, up 15% from projections at the start of Q3 earnings season in the fall. Globally, companies are set to spend $7 trillion in capex for data center infrastructure by 2030. $1.3 trillion of that spending is for energizers such as power generation, with 40% of all that spending set to happen in the US. And remember, that's in just the next 5 years. Securing enough reliable, affordable power is becoming the most critical and difficult part of the AI arms race. And picking the most profitable AI winners is also hard, considering how quickly the technology is changing. There are no guarantees that OpenAI, which is not even public yet, and other AI upstarts will become the profitable tech titans of tomorrow. Still, it appears that AI in general will have a massive impact on the economy and Wall Street. This is why the broader AI energy trade is a long-term winner, and why many of the stocks soared over the last few years. Thankfully, healthy selling in the back half of 2025 across a large portion of the AI energy trade provides investors a great chance to buy into some of the best-in-class AI energy stocks to start 2026. One such name is Vistra. It's an electricity and power generation powerhouse focused on natural gas, nuclear energy, solar, battery storage, which are the areas that AI hyperscalers love. Vistra was the second best performing S&P 500 stock back in 2024, yet it's down over 20% from its September 2025 highs halfway through January of 2026. The AI energy bulls are already stepping back into some of the harder hit stocks across nuclear and beyond after they pulled back to some key technical ranges at the end of 2025. Now let's dive deeper into one of the biggest growth areas in energy and Wall Street, nuclear power. It's clean and always running, which is why the AI hyperscalers and the US government are going all in on it. It has provided 50% of America's carbon-free electricity for decades, and its plants operate at full capacity 92% of the time, making them by far the most reliable energy source. Geothermal and natural gas are the closest at 65 and 60% respectively, with solar all the way down at 23%, since the sun is not always shining. After decades of neglect, critical players across the US government, tech, and beyond are helping kick off a nuclear energy revival. Microsoft, Amazon, Meta, and Alphabet all signed deals with nuclear energy companies to power their AI growth over just the past few years. Meta even began 2026 by signing 3 new nuclear power deals, including one with Vistra. Their collective trillion-dollar balance sheets are helping underwrite the huge costs for next-gen nuclear and helping keep old plants running for decades longer. Nuclear stocks now represent a direct investment in AI and long-term economic growth. The US government under both Biden and now Trump has ramped up its efforts to support nuclear energy, aiming to help cut red tape and actively support the industry through tax credits, grants, loans, and more. President Trump in May signed an executive order to help quadruple capacity by 2050. Now I'm going to highlight what appear to me to be some of the more surefire long-term nuclear energy investments. GE Vernova is a dividend-paying GE spinoff that provides exposure to nuclear, electrification, natural gas, and more. Its stock price has soared since its IPO, yet it's trading around where it was in August to start 2026. Its total order backlog is projected to grow 50% to $200 billion by 2028. Rolls-Royce is a historic engine maker that's leveraging its nuclear propulsion expertise to build small modular reactors. Plus, a former oil industry executive took over in 2023, aiming to quadruple profits in 5 years. It's well ahead of schedule on that front. Constellation Energy is the largest U.S. nuclear power plant operator, and it cemented the direct growth link between nuclear and AI when it secured a 20-year power deal with Microsoft back in 2024, and it landed another deal with Meta, and it closed its $27 billion deal to buy natural gas and geothermal giant Calpine to start 2026. The last big name to focus on is Cameco. It's the second largest uranium producer in the world, and it's one of the only large-scale uranium miners that most regular U.S. retail investors can buy. And its 49% ownership of Westinghouse Electric, which is one of the largest nuclear equipment services businesses in the world, adds to its bull case. Westinghouse landed a huge contract with the U.S. government to help build 10 brand new large-scale reactors. And for investors that don't want to pick winners, look at a few of the ETFs in the space that provide exposure to these large firms and some of the more speculative home-run names we're about to touch on. Small modular reactors, or SMRs, are gaining a ton of steam in the AI energy trade. The goal is to create smaller, high-tech, less costly reactors that can be built far more quickly and operate in far more locations. Over 100 commercial SMR designs are being developed worldwide, with only a handful of those companies likely to make it all the way through to powering AI data centers and more. SMR companies see a not too distant future where they're built directly on site at AI data centers, industrial buildings, military bases, and really anywhere, even the moon. The U.S. Energy Department and NASA announced on January 13th of 2026 their plans to put a nuclear reactor on the moon by 2030. AI data centers ideally want their own direct, behind-the-meter power sources that don't strain the grid, and this is where SMRs are likely to shine. Some of the likely winners are listed here, including GEV, Rolls-Royce, and Westinghouse, which we already dove into, as well as some of the home-run bets such as NuScale and Oklo. Investors should also pay attention to potential IPOs from SMR companies such as Holtec, TerraPower, and others. The rapid revival of nuclear power sent uranium prices soaring to their highest levels in over 15 years. Despite a pullback from their 2024 levels, uranium prices are up over 60% since the start of 2023. Alongside rising demand come supply worries, which are made worse by geopolitical setbacks. Russia and its sphere of influence currently dominate the industry, and the U.S. is slowly trying to ban imports of uranium products from Russia. The U.S. government's newfound support for nuclear energy has sparked the domestic uranium industry revival, to restart mining operations and begin new operations. But restarting the U.S. uranium industry won't happen overnight. Therefore, Cameco, which is already a company we dove into, is likely to be a big winner in the space. And then some of the more speculative upstart names in the U.S. with huge long-term upside are Centrus, Energy Fuels, and Uranium Energy. Moving away from nuclear, it's time to look at solar. Higher interest rates, difficult to compete against periods of growth, and other headwinds crushed solar stocks over the last several years. Some of the other setbacks include the slow phase out of many solar tax credits and more. Thankfully, solar's tumble provides optimistic investors with opportunities to buy potential winners at really beaten down levels. The solar industry stands to bounce back as tech companies and the economy transition away from fossil fuels amid the AI energy boom. And despite all the love that nuclear gets, and rightfully so, solar accounted for over 50% of utility-scale electric generating capacity additions in 2025. These trends are set to continue again in 2026. Plus, many next-gen nuclear reactors aren't even set to begin construction until the end of the decade. The US does not have that long to wait, and neither do the hyperscalers, providing a ton of near-term runway for utility-scale solar. An industry standout to watch is First Solar. It's the largest US solar panel maker, and it's set to grow for years as the country focuses on domestic production of critical aspects of the economy, such as solar panels. It's already benefiting from a wave of tariffs and restrictions on Chinese-made solar panels as well. Given all the recent and near-term expansion of solar energy, battery storage is a crucial part of the market because it addresses the biggest drawback of solar and wind, their intermittency. The sun is not always shining and the wind is not always blowing. Battery and energy storage bolsters grid reliability as solar expands. Battery storage accounted for 30% of utility scale capacity additions in 2025, with growth up around 60% year over year. Utility scale battery storage reportedly grew from well below 5 gigawatts in 2020 to 50 gigawatts last year. Some stocks to watch in the space include Tesla and Fluence. The last area of the AI energy trade I want to highlight today are some of the companies working to expand the grid to meet all the soaring AI-boosted growth. The US grid is aging rapidly, with 70% of transmission lines 25 years or older. Plus, the aging grid was already a problem well before the AI arms race began. Transmission capacity must double to keep up with projected growth. This highlights the dire need for spending and for cutting red tape because thousands of energy projects are currently sitting in interconnection queues. The average queue duration climbed from 3 to 5 years. Some stocks to watch in the space include Quanta Services, Hubble, Mass Tech, and MYR Group. They are all key players helping build, maintain, and expand the electric power grid, making them great picks and shovels AI energy stocks. And that does it for me. Make sure to consider exploring Zacks Advisor tools to help find some of our AI energy stocks we touched on today. Zacks delivers award-winning, forward-looking stock research that's proven to outperform the market. This provides advisors a clear edge in client conversations and portfolio performance. Zacks is built around proprietary Zacks ranks, such as the Zacks rank and deep value frameworks. Zacks helps simplify equity selection, risk analysis, and reporting by putting it all in one seamless platform. And getting started is super easy. Just reach out and book a 15-minute demo and see how Zacks helps you outperform benchmarks, streamline your process, and win client trust. Thanks again.